Hi. In our last video, we talked a little bit about where we see the economy currently, but today we would like to address where we see the market going. So, of course, the market is actually always looking ahead of where we are today. So, Doug, here's our dolly, which we've referenced on these videos many times. This comes out of our Dorsey Wright tool that we rely on very heavily for the way we pick investments. It was interesting to me to note that commodities are still at the top because we see some easing in that area. So what's going on with commodities right now?
Well, let's pull up the next slide here, and you can see commodities back in June at a buy score of 312, and these are small, so Sarah's actually going to have copies of the slides on our internet so you can see them. But it had a score of 312, and it's now down to 2.7 or 278 for its buy signals. So it's weakening, and it will show also oil prices what's happening. And then cash was at 193, it's now 197. So cash is strengthening a little bit still. And then we're seeing that U.S. equities or stocks were at 170, and they've strengthened to 179 over the month. Fixed income also has strengthened from 152 to 173, and we've actually had clients buying municipal bonds because we're seeing them being attractive first time in a while. And then international stocks actually have gone from 158 down to 148, so we're actually seeing a reduction in the attractiveness of international, and we've been reducing some clients' exposure to international, although we've not had very much money in international for
a while.
Yeah, quite some time. And then finally, currencies were 106 to 116, and that's reflecting the strength of the dollar. And what I want to point out is we're one of the few firms that actually has the ability to invest in currencies as a asset class that you could be invested in. So what we should do is pull up the next slide, which is the oil slide. And what you'll see here that oil strengthened in early 22, and we actually had clients going into not only oil but commodities in general. But we've been actually of late selling it because you can see it's been weakening since June. Oil was at $121 a barrel back in June, and now it's back to $88 a barrel. So while the trend's going down, we've been reducing that whole area. So the next area is, why don't you talk about some good areas to invest in?
So the next, if we go down the dolly to domestic equities, the first one here is consumer non-cyclicals. That would be your food-based investments or food-based companies, including alcohol, which...
well, we should pull up the alcohol.
Or consumer non-cyclical.
Yeah.
So what happens, I mean, this is really an area of the market that does really well or is a good defensive play in a recession. We're in a recession, and we don't know how long it will last, but we know that people have got to eat. People will continue to buy groceries and alcohol, or perhaps even more alcohol.
Yep.
So this is a good area of the market to be in. Certainly it's not a fast moving, but it's a defensive play, right? I mean, I think it's a good, solid.
Yeah, it's going to do well in the recession. And then we should talk about the next area that we see.
Yeah, so the next one is energy. Energy doesn't always mean oil and gas, right? It is actually, in this case, this is green energy. We know that Congress has passed the Inflation Reduction Act, which is kind of a whittled down Build Back Better Act. And you can see where back last fall, when there was some thought that the Build Back Better Act would go through, this sector really skyrocketed, but then took a nosedive as soon as it was evident that it wasn't going to get passed. Well, now we see the opposite. We see We know that money is going to be invested into green energy companies, that consumers will be incentivized to buy electric vehicles and whatnot. So we expect that that sector is going to keep going up, and the chart reflects that. And next, we're going to skip over some of these in the middle and talk a little bit about technology, because technology is really one of the areas of the market historically, if you look at what comes back well after rate hikes. Within the first year of a rate hike, traditionally technology has led the pack on recovery. So we've always liked technology. I mean, it certainly is a tool that we all use as part of life, not going anywhere. And we see a nice healthy return on our graph, which is encouraging. My portfolio is happier.
With the technology?
Yes.
And then the next group is going to be healthcare.
Which is really, I mean, the graph that we have here for healthcare is more nanotechnology or biotech.
It's biotechnology.
Yeah.
And we actually did a YouTube a while back on innovations dealing with the CRISPR, DNA mapping. This is a very exciting part of the medical area and technology in general. So in a way, this is kind of a technology play, but it's dealing with healthcare. And this is an area that's going to be a huge growth for like the next 20 years, I think.
It's certainly exciting. I mean, the possibilities.
You know, everyone looks at like Tesla and Apple, and they wish they had got into those stocks when they were at the beginning. Well, I think in this area is where you can find some of the stocks that are going to be the future Apples and Teslas, and that you definitely want to be building this into the portfolio. And of course, if you would like to know some examples, you can call in. We'll be glad to help you on either individual stocks, ETFs, or mutual funds that have these types of investments.
You definitely can't. I mean, I feel like everywhere I go, I have ads sent to me that are related to wellness and healthcare, like in these more innovative kind of companies. Yeah.
Very exciting area.
Yeah.
And then basically the big thing that we want to point out is whenever you're in a recession, the market comes back before the recession's over. Most people wait until the recession is done, and then you've missed the opportunity. And that this is the time to really get into some of these great leaders that are going to really lead the market in the future.
Absolutely. I mean, it's already come back so much in July.
Right.
That doesn't mean we won't have a little bit of a pullback, but we think that we've already hit the bottom.
And we'll see higher. So give us a call. We'll be glad to help you out. Thanks for joining us.